Hi, I'm Martin Gruff, Financial Literacy. We work with a lot of clients approaching retirement, looking to tidy up their properties and set up their money for super and retirement. So basically, the scenario I want to run through today is a client situation we had just last week with this client that's basically looking at should they sell their property now or should they wait until they retire? And we just want to understand potentially what's happening from a tax situation as to what that looks like. So I'll run you through that in a sec. My overarching theme is you want to sell your investment property when you can get the best price. There's no guarantees around that in any market cycle, particularly in this market cycle. So I'm just going to assume that we're getting the same price, but that's always important to understand and talk to your real estate agent and advisors around that. So let's talk about what would be the difference between if this client sold it now or if they sold it when they retired. So the scenario for this client is they've got an investment property, they're going to sell it for about $850,000. They bought it for about $600,000. So when we take away the cost of selling and we add on the cost of buying, they're going to make about a $200,000 capital gain. Now the way that works, I'll explain it in another video, which you might have seen already. How do we calculate capital gains? Effectively, in this particular client, we can halve that capital gain to $100,000. So they're looking at $100,000 capital gain. And in this case, it was just in one person's name. If it was in a husband or wife or a partnership, it'd be split 50-50. In this case, it's one person's name. So scenario number A is they're still working. Scenario number B, they've retired. So when you look at your capital gains tax, it's actually dependent upon what other income you're earning as to how much tax you pay on capital gains. In this particular client, they were earning basically $90,000 a year, which means that they kind of already earned a certain level and filled up certain tax brackets. The tax bracket that they're in with the $90,000 basically means that they're going to pay about, as a minimum, even a bit more, 39% in tax. So on $100,000 capital gain, they're going to pay 39%, they're going to pay $39,000 in tax. In scenario B, what we're talking about is this client is retired. No income, they've got money in super, which is tax-free, doesn't go in their personal tax return, they're not yet eligible for the age pension, so they literally have no other rental income, no income. So what would happen in that case? Their other income is zero. So they actually get the tax-free threshold, they get a certain amount of tax at a lower rate at 20%, they get a certain amount of tax at 34%. The way that averages out on that $100,000 sale, the tax that they have to pay would be about $22,000. So we're talking about the same sale price, the same capital gain of $100,000, but purely by timing it in a year where they retired or they had low income because they weren't working or they were self-employed and they manipulated their income down, there's a $17,000 tax difference on the same amount of money. So if you can get that benefit, you clearly want to. To make it even better, because they're self-employed, or this particular client was, but actually doesn't even matter if you're or not, because you're not working, you can actually make super contributions out of that money to reduce that tax even further. In this client's case, they could potentially take another $5,000 off that tax bill. Now we're only talking about a $17,000 tax bill on this $100,000 gain. So basically about a $22,000 difference that they wouldn't have been able to do here because they already maximised their contribution limits. So it's important to remember when you're selling a property, understand the timing in terms of when you sell it and what that means for capital gains, and understand and plan around how you might be able to maximise that approaching your retirement. If you want to find out more, we've got plenty of other videos talking about super, retirement and contributions. Check them out on our channels.